Good morning, everyone, and thank you for joining this webinar about how to get ready for making tax digital for income tax if you're a business. My name is Kieran, and I'll be co-presenting the webinar today with Samantha. The webinar will last for around an hour. The information you'll be receiving today is correct at the time of delivery, and today's date is the 12th of June, 2025. Guidance is updated regularly, so we advise you to refer to gov.uk for regular updates. I'll start by explaining how to use the control panel and ask questions. If you're watching on a PC, laptop, or Mac, you'll have a control panel like the one on the screen now. Near the top of the control panel, in the audio box, you will see the red muted message. Everyone's microphone is muted so that you can hear myself and Samantha clearly. You can adjust the sound from this audio box. And there's a message at the top right-hand side of the screen for anyone who can't hear me. You can usually fix audio problems if you select the phone call button, then make sure you go back and select the computer audio button again. If this doesn't solve the problem, then please close the webinar and log back in. Halfway down the control panel, there is a handouts box. The handouts will include links to the information being covered in the webinar today. You can download these during the webinar, and they're in two formats, Word and PDF, so please download in whichever format you prefer. There's a question and answers box near the bottom of the panel. Type your question into the box and then send. You can make the question box bigger by selecting the symbol at the top right of the question box. You can then resize the box. Before you leave the webinar, you can choose to save the question and answers log. For PC or laptop users, on the control panel, select File, which is in the top left-hand corner of the control panel, and then Save Questions log. For Mac users, on the GoToMeeting toolbar, select File and Save Message log. And I'll show you this again at the end of the webinar. A link to a recording of the webinar plus useful links will be sent via email to you within a couple of days. If you're joining us on a phone or tablet, you may see a toolbar instead of the control panel. In that case, tap on the question mark to ask a question. You should take a screenshot to save answers. We suggest that you do this as you go along, as you will not be able to save the question and answers log on a mobile device. Tap on the document icon to download the handouts. The icon should already have appeared, as the handouts are available for you to download. If you are unable to download the handouts, the links will be included in the follow-up email that you'll receive in a few days. We have colleagues in the background answering your questions during the webinar using the control panel question and answers box. They will aim to answer as many of your questions as they can today, but may not be able to reply to them all. Please note, we are unable to answer questions specific to individual circumstances. So for that reason, can we ask that you don't post any personal information in the question box? And finally, if we have any groups of attendees today, could I ask you to use the question box to tell us how many additional people are taking part? So for example, if there are 3 of you taking part as a group, then please type 2 in the question box, and I'll just give you a minute or so to do that. Thank you for that additional information. During today's webinar, we will give you up-to-date information to help you get ready for when making tax digital for income tax becomes a legal requirement from April 2026, and encourage you to join making tax digital for income tax sooner. We'll start with planning for making tax digital for income tax, understanding the rules, and work out who will be affected and when. We'll then explain how to prepare for making tax digital for income tax, discussing how to work out who does what, and how you can make informed software choices. We will then go into how you can take action for making tax digital for income tax, authorize your agent, and sign up to MTD. And finally, we will cover using making tax digital for income tax, following the rules, and consider how you can utilize any benefits and opportunities. And at this point of the webinar, I'm going to hand over to Samantha, who will continue with this section. So good morning, Samantha.
Good morning, Kieran, thank you, and good morning to everyone who's joined us on this webinar today. First, we are going to look at planning and understanding the rules for making tax digital for income tax. From April 2026, some sole traders and landlords must use it based on their total annual income from self-employment and property. You or your agent, if you have one, will need to use MTD compatible software to create, store and correct digital records of your business, income and expenses, send quarterly updates to HMRC, and submit your tax return by the 31st of January the following year. At the end of the tax year, you will be required to finalise your income tax position using software. You must send HMRC information on personal income sources that you have, such as savings or dividend income, before you finalise your income tax position. Once you have told HMRC about all of your taxable income for the year, you can submit your tax return. When you submit your tax return, you will declare that the information you have provided is correct and complete, and you have finalised your income tax position for the tax year. We are also introducing a fairer, more proportionate penalty system based on the amount of tax you owe and how long it takes you to pay it. To plan effectively for preparing your practice and clients, you must first understand how many of your clients will be affected and when. To help with this, we will now cover when MTD becomes a legal requirement. What is the qualifying income and what are the exemptions? You'll need to use Making Tax Digital for income tax if all of the following apply. You're an individual registered for self-assessment. You get income from self-employment or property or both, and your qualifying income is above the threshold. You have made one or more self-assessment tax returns. MTD is being phased in from April 2026, depending on qualifying income. From 6th of April 2026, self-employed individuals and landlords with income from self-employment and property that totals over £50,000 for the 2024 to 2025 tax year will have to keep digital records and send quarterly updates to HMRC using compatible software. This will be for the 2026 to 2027 tax return onwards. From the 6th of April 2027, self-employed individuals and landlords with income from self-employment and property that totals over £30,000 for the 2025 to 2026 tax year will have to keep digital records and send quarterly updates to HMRC using compatible software. This will be for the 2027 to 2028 tax return onwards. And the government recently announced that from the 6th of April 2028, self-employed individuals and landlords with income from self-employment and property that totals over £20,000 for the 2026 to 2027 tax year will have to keep digital records and send quarterly updates to HMRC using compatible software. This will be for the 2028 to 2029 tax return onwards. So now that we know when, how do we know which of these dates applies to you? To know this, you need to understand how we define qualifying income. Your qualifying income is the total gross income that you get in a tax year from self-employment and property. We assess your gross income, also called your turnover before you deduct expenses. To assess your qualifying income for a tax year, we will look at the tax return that you submitted the year before. We will now go on to cover qualifying income in more detail. This information is critical in terms of determining which clients will be required to use Making Tax Digital. To assess your qualifying income for a tax year, we'll look at the self-assessment tax return that you submitted in the previous tax year. For example, to assess your qualifying income for the tax year 2026 to 2027, we'll look at the tax return that you need to submit by the 31st of January 2026. This tax return is for the tax year 2024 to 2025. After you submit your return, we'll check if your qualifying income is more than £50,000. If it is, we'll tell you when you must start using Making Tax Digital for income tax. If you're already using Making Tax Digital for income tax and start a new business, you do not need to use Making Tax Digital for income tax for the new business until you submit a tax return which includes the income from that new business. For example, you may start a new business in May 2026. Your first tax return that will include the income from this business will be the tax return for the 2026 to 2027 tax year, which you would need to submit by the 31st of January 2028. You would then need to use Making Tax Digital for income tax for this business from the 6th of April 2028. However, you can choose to voluntarily use Making Tax Digital for income tax for the new business from when it starts. If we have the data, we'll annualize your qualifying income. For example, if you have become a sole trader, but you've only been trading for 6 months in your first tax year, we'll double your income to find out your qualifying income. Your share of the property income will count towards your qualifying income. For example, you jointly own a property with your sibling, which generates £50,000 in income. You both receive an equal share. You do not have any income from self-employment or other property income. In this example, your qualifying income would be £25,000. Income from a partnership does not count towards your qualifying income. You may have transition profits from previous tax years that will be assessed in the tax year 2024 to 2025 and the next 4 tax years. These profits will not count towards your qualifying income. We will now move on to customers who may be exempt, even if their qualifying income is above the threshold. You will be able to apply for an exemption from using Making Tax Digital for income tax when the application process opens later this year. If you consider that you are digitally excluded, you can apply if, for any reason, it's not practical for you to use software to keep digital records or submit them. This may be due to your age, disability, location, or another reason. Practicing members of a religious society or order with beliefs that are incompatible with using electronic communications. You're automatically exempt and cannot sign up for Making Tax Digital if you are a trustee, including a charitable trustee or a trustee of non-registered pension schemes, Person that does not have a national insurance number, this only applies for a tax year where you do not have a national insurance number on the 31st of January before the start of that tax year. Personal representative of someone who has died, Lloyd's member in relation to your underwriting business, or a non-resident company. At this point now, I will hand over to Kieran for the next section. So back to you, Kieran. Thanks.
Thank you, Samantha. Understanding qualifying income and how it is used to determine if you are required to use Making Tax Digital is key. Let's now look at how you can utilize that understanding. There are many ways in which you can check who will be affected by Making Tax Digital. These include checking the current tax year information, the interactive tool on gov.uk, and any letters HMRC send you. We'll cover these now. As qualifying income is based on turnover, you may not have to wait until you've completed your tax return for 2024 to 2025 to determine if you will be legally required to use Making Tax Digital for income tax. HMRC will assess your legal requirements for Making Tax Digital for income tax when you submit your 2024 to 2025 tax return. This is so that you can anticipate if you are likely to be legally required to use the service and take steps to prepare. Consider the information that you have already, then decide whether you are legally required to sign up. It is important for you to learn and understand these rules now. To help you determine when you are affected, we've introduced an interactive tool on gov.uk. Check if you need to use Making Tax Digital for income tax. This tool will help you understand if you need to use Making Tax Digital for income tax and when you need to start meeting your new obligations. It will also set out the next steps that you should take in preparing for Making Tax Digital for income tax, and will allow you to save or print a copy of the results. We are writing to all customers who may be legally required to use Making Tax Digital for income tax from April 2026, based on their 2023 to 2024 tax returns. These letters will tell you, these letters will tell you if we think you will be required to use Making Tax Digital for income tax, give you more information about the changes, and tell you how you can get ready and involved. We will also write to formally notify customers who will be legally required and what you need to do. With preparations you will have to make to begin with, with preparations you will have to make to begin using the Making Tax Digital service, you should consider your current and projected gross income from self-employment, UK property, and foreign property to anticipate if you will be mandated to use Making Tax Digital. You may employ the services of a bookkeeper, an accountant, or both. Consider who will record the digital records using software, submit quarterly updates, and who will carry out end-of-year actions to submit the tax return. Let's talk through each of these steps to help you decide how this will work in practice. Let's begin with digital records and the ways in which you can be compliant with the digital record keeping requirements. Digital records, as a minimum, document the date, amount, and category of any income or expense for the business. You will need to create and keep digital records of your self-employment and property income and use Making Tax Digital for income tax compatible software to create summary totals of income and expenses by category and submit these as a quarterly update. You only need to keep digital records of your self-employment and property income and expenses, such as self-employment income, including sales, takings and fees, self-employment expenses, including the cost of stock, travel costs, office costs, and financial costs. Property income, including rent, premiums for the grant of a lease, reverse premiums, and inducements. And property expenses, including rent, the cost of repairs, maintenance, or other services. You will note that these correspond to the boxes on the supplementary pages for self-employment and income from property. If you have more than one business, you must keep separate records and make separate submissions for each business. You can treat all UK properties as one UK property business and treat all non-UK properties as one foreign property business. If you own foreign property in more than one country, keep separate digital records for each country. If you're sure you'll use a simplified expenses scheme, you do not need to keep digital records of your actual expenses. If you're not sure, you should keep digital records of all expenses. You can choose to categorize your data records in less detail if you have either total UK property income of less than £90,000 before expenses, or total income from self-employment of less than £90,000 before expenses. You can do this for one or both sources of income. If you're a sole trader, you only need to record whether a transaction is income or an expense. If you're a landlord and receive rental income from a residential property, excluding furnished holiday lets, you need to categorize your expenses in more detail. You must record if a transaction is an income or an expense, and record whether expenses are for residential finance costs. You may need to correct an individual digital record of a transaction. For example, if you made a mistake when creating a digital record, or you forgot to record an expense or income that you received. To correct your records, you may need to change, delete, or create a digital record. If you make the correction during the tax year, it will be included when you send your next quarterly update. If you use software that lets you create digital records, you can make the correction in your software. If you create digital records in a separate record-keeping software, for example a spreadsheet, you should make the correction there and then digitally link your records to your bridging software. You can also make some adjustments in your digital records and can choose to do this in year or at the end of the year. You can choose to keep a digital record of the disallowable portion of an expense in your software. For example, you have a mobile phone bill which totals £200. The bill is made up of £125 for business calls and £75 for personal calls, which is the disallowable portion of the expense. If you choose to keep a record of the disallowable portion, you should create a digital record of the full £200 expense and the £75 disallowable portion. If you have a transaction which is part capital and part revenue, you can either record the full value of a transaction, including capital elements. You should make an adjustment before finalizing your business income, or create a digital record of just the revenue amount. For example, if you make a mortgage payment, you will need to create a digital record of either the interest or the full amount. If you create a digital record of the full amount, you will need to create an appointment, you will need to make an appointment at the end of the tax year before you finalize your income tax position. I'll just repeat myself, I do apologize. If you create a record of the full amount, you will need to make an apportionment at the end of the tax year before you finalize your income tax position. Now we are going to look at quarterly updates. It is important that you have a good understanding of the legal requirements that come with making tax digital for income tax, so that you can consider how the changes impact you. There are many decisions to be made, and we want you to be as fully informed as possible when considering those decisions. Quarterly updates are unadjusted summaries of categorized income and expenses submitted each quarter to HMRC using Making Tax Digital for Income Tax compatible software. They are not tax returns. You are not required to make any accounting or tax adjustments before sending an update. There is no payments required with the quarterly update. The update must be sent for each trade and property business. So it could be one update for self-employment and one for property. Every 3 months, Making Tax Digital for Income Tax software will total the digital records and produce summaries for each income and expense category. You'll submit these from software each quarter. The quarterly update could be as simple as pressing a button. The key consideration is who will create and maintain the digital records, and who will submit the quarterly updates. This could be you, an accountant, or a bookkeeper. It is important that you understand what is involved in digital record keeping and quarterly updates, and if you already have an agent, you may want to discuss options. The multiple agent solution was delivered in April 2025. This allows customers to authorize multiple agents to act on their behalf in Making Tax Digital for Income Tax only. This will support customers who instruct one agent to fulfill quarterly updates and another agent to file their end-of-year return. There will be 2 categories of agent under the multiple agent solution. The first is the main agent, who will be able to act on their client's behalf across all Making Tax Digital for Income Tax services. If you are an existing authorized agent for a client submitting their self-assessment tax return, you will be their main agent. The other will be the supporting agent, who will have restricted permissions and will only be able to undertake certain activities or functions on their client's behalf, including submission of quarterly updates. It is important to note that although MTD for income tax, customers can have more than one agent involved in a single business stream, one set of aggregated digital records must be produced to send a single quarterly update. Consider who will do what through the year to ensure you keep accurate digital records and send quarterly updates. Be aware of the multiple agent functionality and the options this provides if you choose to be represented. In conjunction with thinking about who does what through the year, you will need to think about how the software will be used and by whom. You will need to use Making Tax Digital for Income Tax compatible software for creating, storing, and correcting digital records of your business income and expenses. The software will also be used for sending quarterly updates to HMRC, receiving information such as your tax estimates from HMRC. And compatible software must also be used for submitting your end-of-year tax return to HMRC. Depending on your circumstances and needs, you may need one item of software which can do all of these things, or you may need to link multiple software products together. For example, you might have one that you use to keep digital records and send quarterly updates, and another for the end-of-year return. If you use bridging software or multiple software packages, once you've created a digital record in your spreadsheet or software product, the digital records can only be transferred using a digital link. This means that you must not manually edit or move the record within the spreadsheet or to other software if it has already been included in a quarterly update. You must not copy information by writing it out in another cell or in another software, or rewrite a record, or use the cut and paste or copy and paste to move records. We will now talk through some examples of digital record keeping and multiple software products. Here we see that a mandated customer has MTD compatible software and is using it to create and store the digital records. At the end of each quarter, they use the compatible software to send the quarterly update. This can potentially be a couple of clicks. In this example, the mandated customer is again creating the digital records in their own software, but they are sending the digital records via digital link to their agent to submit the quarterly update. This might be the case where the agent is choosing to carry out in-year adjustments at each quarter, such as disallowable expenses. The agent must also have compatible software. Here we have mandated customer who sends their business records to the agent to create the digital records. Note that there is no requirement for the business records to be transferred by digital link. At the end of the quarter, the agent uses their compatible software to send the quarterly update. In the last example, we are illustrating how multiple agents and multiple software products can be used to meet the requirements for making tax digital. During the tax year, the mandated customer sends a bookkeeper their business records using compatible software. The bookkeeper creates digital records and sends the quarterly submissions. The mandated customer has engaged the services of an agent to make any adjustment to income and expenses, send information on other income sources, and submit the tax return. The bookkeeper would need to transfer the digital records that were used for the quarterly updates so that the agent has the information for their end-of-year actions. If you already use a software product for self-assessment or VAT, ask your provider what their plans are for making tax digital for income tax. Check with your provider that this software meets your needs. And check Making Tax Digital for Income Tax software choice page on gov.uk. Make your software choices for the whole MTD journey of keeping digital records, sending quarterly updates, and completing the end-of-year tasks, and link this to the thinking you're doing in tandem about who does what. Keep in mind other factors, including which accounting method you will use and whether you intend to carry out in-year adjustments. And at this point of the webinar, I'm going to hand back over to Samantha, who will continue. So back to you, Samantha.
Thanks, Kieran. In this section, we will look at action you need to take to use the Making Tax Digital service. Let's begin with what to do if you have an agent acting on your behalf. You can sign yourself up to Making Tax Digital for income tax, or if you have an agent, they can do this on your behalf. In order for your agent to sign you up, they must have an agent services account, which holds authorization to act on your behalf. You can check with your agent if you are required to provide authorization using a digital handshake. If you are required to provide authorization, your agent will send you an email with a link. Select the link and sign in with the Government Gateway user ID you use for your personal tax affairs. You may have more than one, so make sure you use the correct ID. The link will expire after 21 days. If you have not responded by then, you'll need to ask your agent to send another link. You may be asked to verify your identity before you can give authorization to your agent. Let's now look at the process to sign up to Making Tax Digital for income tax. Making Tax Digital for income tax is currently voluntary. You may be able to sign up to help us test and develop the service. If you want to sign up at this stage, you can choose whether you want to sign up for testing early to begin using the service from April 2026, so you are prepared. HMRC will check that you're eligible to sign up based on the details that you provide. If you want to sign up now, you will still need to submit a self-assessment tax return for the 2024 to 2025 tax year. If you need to sign up in the future, you can either sign up to test the service now for all your self-employment and property income sources, or continue submitting a self-assessment tax return as normal and sign up at a later date. You can sign up voluntarily if all of the following apply. Your personal details are up to date with HMRC. You're a UK resident. You have a national insurance number. You have submitted at least one self-assessment tax return. You're up to date with your tax records. For example, you have no outstanding tax liabilities. You can use an accounting period that runs from either the 6th of April to the 5th of April or the 1st of April to the 31st of March. You must make sure your software can support this accounting period. You cannot sign up voluntarily if you have a payment plan with HMRC, are a partner in a partnership, claim married couples allowance, claim blind person's allowance, are currently or are going to be bankrupt or insolvent, are an MP, Minister of Religion or Lloyd's underwriter, have income from being a foster carer or being in a shared lives scheme, have income from a trust, are subject to a compliance inquiry, use averaging or other arrangements because your profits vary between years, for example, because you're a farmer, writer, or artist, are signing up on behalf of someone else unless you're an agent. This includes but is not limited to if you're an insolvency practitioner, a nominee, a solicitor. In order to use Making Tax Digital for income tax, you must sign up to use it. If you can sign up to use Making Tax Digital for income tax ahead of it becoming a legal requirement, you will get a better understanding of how the change will affect you and your clients. The best way you can find out is to sign up to use Making Tax Digital before you are mandated. You will see exactly what is involved. There is a decreasing timeline before Making Tax Digital for income tax becomes a legal requirement in April 2026. It is less than a year away. Signing up early means you get ahead of the game. You will be gradually introduced to new processes and software, helping you plan and transition and build your confidence with Making Tax Digital for income tax compatible software. You get the opportunity to help shape Making Tax Digital for income tax if you participate in testing. We are always seeking feedback and ways to improve. There will be no penalties for late submission of the quarterly updates during the testing phase. Anyone who signs up to use MTD service in 25 to 26 will have direct access to a dedicated customer support team for Making Tax Digital for income tax. The team work Monday to Friday from 8 in the morning to 6 o'clock in the evening. The team are all very experienced in self-assessment and in Making Tax Digital and will be able to help with any MTD queries and any personal tax queries for clients who are in the testing program. There are some things that must be in place for you to join the sign up early. You will need to get software that works with Making Tax Digital for income tax. your national insurance number, your business start date or the date you started receiving property income if this is within the last 2 years, your accounting methods such as cash basis accounting or traditional accounting, the tax year you would like to start using Making Tax Digital for income tax. If you are a sole trader, you'll also need your business name. This is the name you use on your invoices, your business address, the nature of your business. If you have multiple income sources, you need to sign up each one for Making Tax Digital for income tax. Once signed up to Making Tax Digital, you will receive once signed up to Making Tax Digital, you will have access to the Manage Your Service, your self-assessment service. This provides useful information and many ways in which you can self-serve in real time. It allows you to view updates and deadlines, add, manage or cease a business or income source, manage your reporting frequency, see next charges due, see payments, credits and refunds, see return information. We will now look at these in more detail. When you access the Next Charges Due service, you will be shown all payment information for your returns that fall within MTD. To view earlier self-assessment tax years, you would use your self-assessment online account. Within this service, you can now adjust payments on account immediately and make a payment. The Your Updates and Deadline services will show upcoming and missed quarterly updates, showing the periods and deadlines for each. In the Payments, Credits and Refunds service, you can get a summary of money in your client's account. This only shows if the account is in credit and will provide information on where the money came from, such as a payment made. When accessing the Payment, Credits and Refund section, you are able to check the progress of a refund request, see any credits on your account, and be able to access a breakdown of each. The Return service allows you to view your current return, showing estimated tax calculations for the year to date and forecasted for the end of year as well. This provides a breakdown of income, allowances and deductions. Your business will let you add, manage or cease a business or income source to tell us immediately about any changes. And finally, in account settings, you can see and manage your quarterly reporting obligations. Please note that quarterly updates are mandatory if you are above the qualifying income threshold, so changes to reporting obligations can only be made if you are reporting annually or voluntarily reporting quarterly. Let's now look at how you will comply with MTD requirements and realize some of the benefits. We hope that the information in this webinar will enable you to make informed decisions about how you will comply with the requirements of MTD. Using Making Tax Digital compatible software, keeping digital records, sending quarterly updates, and submitting your tax return using Making Tax Digital compatible software. With hopefully a better understanding of Making Tax Digital, you should consider how you will comply with the requirements in such a way that you can realize some of the benefits. Digitalizing our service will bring benefits by reducing the risk of unintentional errors, saving time when you come to submit your end-of-year tax return, supporting wider productivity and less time managing paperwork through use of digital tools, enabling HMRC to better tailor services. Digitalization of business finances can reduce the burden by automating routine tasks such as invoicing and expense tracking, leading ultimately to more efficient and accurate tax processing. So I will now hand over to Kieran to continue. So back to you, Kieran. Thanks.
Thanks, Samantha. Let's now summarise what we have covered in today's webinar. Making tax digital for income tax becomes a legal requirement from April 2026, based on tax information for the 2024 to 2025 tax year. If making tax digital for income tax applies to you based on your 2024 to 2025 income, you will need to get ready to begin digital record keeping and the submission of quarterly updates from April 2026. This should make your end-of-year submission process easier. If you sign up early, you'll have access to our dedicated support team who can help you with all tax matters. You will hopefully now be in a better position to plan for action and follow the steps to get ready. Here is a reminder of what they are and what we've covered today. We have covered planning for making tax digital for income tax, understanding the rules and working out who will be affected and when. We then explained how to prepare for making tax digital for income tax, discussed how to work out who does what, and how you can make informed software choices. We then went into how you can take action for making tax digital for income tax, authorize your agent, and sign up to MTD. And finally, we covered using making tax digital for income tax, following the rules and considering how you can utilize any benefits and opportunities. Our full range of help and guidance can be viewed online from your mobile, tablet, or PC at any time, and links to further help and guidance are included in the handouts. If you're using a PC or a laptop and you'd like to save the questions and answers that have been shared in the question box today, select File and then Save Questions Log at the top of your control panel. You can also save the questions and answers log from a Mac. On the GoToMeeting toolbar, select File and Save Questions. If using a mobile device or tablet, you need to take screenshots as you are not able to download the question and answers log. The control panel will close at the end of the webinar. So, if you want to download the handouts and the question and answers log and haven't yet, we will give you time to download these at the end of the webinar. I will leave the webinar open for around 5 minutes to allow you to do this. Just to remind you, we will also send you an email including a link to a recording of the webinar and useful links within a couple of days. When the webinar has closed, you'll be directed to a short survey. Your feedback is very useful and helps us to keep developing our webinars. Please do not send in any more questions as these will not be answered in the 5 minutes that the webinar will be left open. So thank you to everyone involved in today's webinar and of course to those who have attended. It will now go quiet for you to download the handouts and the question log. So from myself, Samantha and the rest of the team, goodbye for now.